Hello students, I am Assistant Professor Dr. V.D. Jadhav, PG Faculty of Commerce and Management, People's College, Nanded. Today I am taking lecture on subject Advanced Accounting First, topic number 4, Branch Accounting, particularly for BCom third year 5th semester students who are learning from Swami Ramananda Tirth Marathwada University, Nanded. First part taking of this topic, that is introduction. A branch may be defined as a section of an enterprise geographically separated from the rest of the business, controlled by a head office and generally carrying on the same activities as of the enterprise. As a business grows, it may open up branches in different towns and cities in order to market its products, services over a large area and thus increase its profits. Branch is simply a segment of a business. Branch is not a separate legal entity. Need for branch accounting. Through a branch is typically located at some distance from the head office. It carries on all its activities under its direction and control. Therefore, it is necessary that the head office and the branch obtain information from either side at regular intervals about the proper functioning of the branch. This requires the head office and the branch to keep proper books of accounts. The need for branch accounting arises as to number A, ascertain the profitability of each branch separately for a particular accounting period. Number B, ascertain the financial position of each separately at the end of that accounting period. Number C, assess the progress and performances of each branch. Number D, fulfill the audit requirements under section 228 of the Companies Act 1956. Number E, incorporate the profit or loss made by the branch and its assets and liabilities in the firm's final accounts. Number F, ascertain the requirements of stock and cash for each branch. Number G, ascertain the rate of return on capital invested of the branch is satisfactory or not. Number H, ascertain whether the branch should be expanded or closed. Number I, ascertain the quality of stock held by each branch at the end of that accounting period. Number J, ascertain the amount of commission payable to the manager if that is based on profits. The next part, classification of branches. The branch is classified in two major categories. That is, home branch is also called as inland branch, and another foreign branch. Home branches and foreign branches, these are the two major categories. Foreign branches are not for our syllabus purpose. Only home branches or inland branches is for our syllabus purpose. The home branches is classified in two categories, that is dependent branches and independent branches. We have syllabus only dependent branches. There is no independent branches for the our syllabus purpose. Its name indicates what are the functioning of that branches. Then next part, sorry, I'm continuing classification. For accounting purpose, branches are classified these categories. Dependent branches, these are small branches. Accounting is done by head office. Information regarding transactions is supplied by the branch periodically. Independent branches, these are large branches. They keep their own accounts, prepare trial balance and send it to the head office for its incorporation in head office books. Then foreign branches, these are the branches in foreign countries. We have syllabus only dependent branches, hence I am elaborating this part, dependent branches. When branches are small books of accounts are maintained by the head office, branches whose accounts are maintained by the head office are called dependent branches. The business methods employed in this case are as follows. Number one, these branches sell only such goods which are supplied by the head office. Normally they are not allowed to make purchases. Number second, selling price of the goods is fixed by the head office. Number third, selling policy is decided by the head office, whether to sell for cash or credit or both, etc. Number fourth, daily cash proceeds, for example cash sales, cash collection from debtors, etc., are deposited into the head office account opened in a local bank. Number fifth, all branch expenses of regular nature are paid by the head office by sending checks. Petty expenses are paid by the branch manager out of petty cash account, to which periodic transfers are made by the head office. Number six, the branches send periodical statements to the head office showing sales, collection, discount, bad debts, expenses, and stock of goods, etc. The next part, methods of maintaining the accounts of dependent branches. There are four methods: debtors method, stock and debtors method, final account method, wholesale branch method. But we have only first two methods for our syllabus, that is debtors method and stock and debtors method. The question is only asking in the examination on the basis of these first two methods. Then I am elaborating this. The branch which does not maintain a complete record of its transactions is said to be dependent one. The head office may maintain the accounts of such branches according to any of the above method. Now we are seeing first method, debtors method. This method is usually adopted when the branch is of small size. Under this method, the head office maintains separate branch account for each branch. Its purpose is to ascertain profit or loss made by each branch. This is the simplest system of calculating branch profit by preparing only one account called the branch account. The account is prepared in the head office books. This system is also known as one account system. The second method, stock and debtors method or stock and debtors system. In this method, a detailed record regarding the stock and debtors of the branch is maintained at the head office. Stock and debtor system is generally used when the goods are sent to the branch at an invoice price and the size of the branch is large. A number of other accounts are also opened for recording branch transactions. A brief description of each of these accounts is given below. First one, branch stock account. This account deals with goods, goods received, goods returned, and goods sold by the branch are recorded in this account. Surplus or shortage of stock is also entered in this account. Every increase in stock is recorded on debit side and every decrease in stock is put on the credit side of this account. Entries in this account are made at invoice price. Number second, branch debtors account. All transactions relating to the branch debtors are recorded in this account. Transaction like sales on credit, cash received, bills dishonored, bad debts, discount, etc. are entered in this account. Number third, branch adjustment account. This account is maintained to find out gross profit made at branch, all loadings, that is opening stock, goods sent, goods return, closing stock, shortage of stock or surplus of stock are shown. Number 4, branch profit and loss account. To ascertain the net profit or net loss, it prepares. Number 5, branch expenses account. Branch expenses paid by the branch or by head office are shown in this account. Bad debts, discount, depreciation, etc. are also entered in this account. The balance of this account is transferred to the branch profit and loss account, thereby closed. Number 6, goods sent to branch account. To ascertain the net cost of goods sent to branch, this account is credited with the invoice price of goods sent to the branch by the head office and transferred from other branches and debited with the invoice price of the goods returned transferred by the branch. The balancing figure on the debit side represents the cost of the net goods sent to the branch, which is adjusted against purchase trading account by the head office. This account cannot have any opening or closing balance. The next, stock reserve account. It shows a credit balance equal to loading on closing stock. The account opens with a credit balance equal to the loading on opening stock. The account may be compared to the shadow of person which moves with the person. Here the loading comes with stock and goes with stock. This is the very important sentence, that is, the account may be compared to the shadow of a person which moves with the person. Here the loading comes with stock and goes with stock. The next part, when goods are invoiced at selling price. In order to maintain secrecy about branch profits, often goods are forwarded to the branch at selling price, since the branch staff will not know the real cost of the goods. They cannot have any idea about the profits, but in order to find out actual branch profit, the head office will have to eliminate the loading for this. The following entries must be made in the branch account. Number 1, these are the very important part of this topic. Listen carefully. Number 1, loading in opening stock is shown on the credit side of branch account as stock reserve account. Number 2, loading in closing stock is shown on the debit side of the branch account as stock reserve account. Number 3, loading in goods sent is shown on the credit side of branch account as goods sent to branch account. Number 4, loading in goods return is shown on the debit side of the branch account as goods sent to branch account. Yes, you are listening correctly. Both sides shown goods sent to branch account. The, the following table will be very useful in the calculation of loading. That is left side column, percentage on cost price, right side column, loading to be deducted from invoice price for arriving at cost price. Suppose if in that question is given 20% or 1/5 of cost price, then it should be calculated in invoice price 1/6 of invoice price, because of invoice price has involved profit also. Then 25% of cost price or 1/4 of cost price means 1/5 of invoice price. Okay. This concept you will understand betterly when I will conduct your actual numerical problems. Don't worry. Thank you.